So, welcome to this presentation. My name is British HODL. If this is the first time you're watching this, I create these videos because I want to build a community of people who are into Bitcoin, and hopefully, if you're into Bitcoin, you'll choose that this content is valuable, and you'll take part in the community that we're building by subscribing or whatever else. This particular presentation, um, it's going to take a little bit of time to go through this, and I want you to pay very close attention, especially if you've got assets in real estate, stock market, gold, silver, etc., legacy assets. If you've got your wealth that you've been building and focusing on and growing for your children, for your progeny, for the future, for yourself, for your family, then this is a very, very important presentation. By the end of this, you'll realize how your value is being stolen. And I'm going to demonstrate to you by showing you actual charts of how this has actively happened over the last few years. So, first thing I want to do is just look at this is the recent Fed balance sheet. And as you can see, they've been cutting over the last year or so, and within a very, very short period of time, they've actually reversed 50% of the cuts that they made in the balance sheet, and that's a common thing that happens. And so I was thinking about, you know, what does it mean to have wealth? What does it mean to have value? What does it mean to protect value? And I put this tweet out, and I basically said, if you had $1 million in 1971, and then you had $7.4 million in 2023, your wealth has not grown. It's basically kept up with published inflation figures, and published is very important there. And this is the issue that most people who have their wealth in real estate, stocks, and legacy assets are facing. There's no real growth, just stability. Now, most people's property portfolios will probably be worth more than $7.4 million. And that's when I started thinking about, what causes wealth to go to what is this? What happens when this goes up? I want you to start, before we even get into this, to start thinking about wealth in terms of price and value. I want you to think about this differently, two separate things: the price of something and the value of something. So, in this example, the price of that $1 million went up to $7.4 million, but the value of that $1 million stayed the same over that period. Even though the price changed, the value stayed the same. And what I want to demonstrate to you here is something that is quite worrying when it comes to most people's assets and most people's wealth. And that is the differentiation between price and value. So the first thing that I want to bring up here is the M2 supply that you can see. And if we zoom out on this, if we do all here, if we zoom out on this, you can see how this has grown, over decades. It has just continued to go up. And really, to me, this number that I calculated here on this tweet was based on published inflation figures. Really, what I think, if you were to factor in how do I protect my value, it shouldn't be based on inflation numbers. It should be based on the capacity of the system. And the best way I could think about doing that right now is M2 supply, right? How much M2 supply is there, and what percentage of that do you have? And then if M2 supply goes up, then then your wealth gets devalued. And so I started thinking about this, and I started saying, well, I've always sort of looked at debasement and looked at the rate of debasement, and there's a lot of people who have their assets in stocks and real estate and things like that. And I was thinking, you know, how have these kept up with the rate of debasement, right? Because I understand, if you've got multiple millions of dollars of net worth, you're not going to be able to put 100% of that into Bitcoin unless it was made through Bitcoin. Because you've got houses, you've got watches. I collect watches as well, right? So you got houses, watches, all this other stuff that stocks, everything else. I have stocks too, right? And you have all these other things that you can't just sell out of sometimes. And most importantly, you might not even want to sell out of because you understand that there is a certain amount of stability that comes with it. But I wanted to understand the cost of that stability and what was actually happening in the trade between value and price. And so the first thing that I thought of was, well, this is what the S&P has done, over the last few decades. That's pretty good, right? Well, yeah, it is pretty good. This is the price of the S&P in US dollars, okay? But what is the value proposition of the S&P done based on the monetary debasement that's happened? Has the S&P made gains? Because you would think that, right? Like if the dollar value of the S&P has gone up, surely the value that it's protecting must have gone up too. Well, the truth is this. This is the chart of the S&P 500 valued in M2 since 1960. And if you can see here, even though the S&P, even though this is the dollar price of the S&P, the value of the S&P has not even breached its 2000 high. Forget the 2000 high. It's not even breached the 2007 high. Breached it a little bit and then came crashing back down. We're struggling to breach this value here. What this means is that if you've been holding wealth in the S&P since 2007, you're currently underwater. Based on value, dollars will have gone up for sure. Your dollar account value will have gone up. But based on value, you're actually lower. You've actually lost money. You've actually lost value. And let alone the 2000s value. So the market is not overvalued when it comes to M2. It's not overvalued at all when it comes to M2. It's got a long way to go to hit that. However, what this demonstrates is that all of the returns of this millennium in the S&P have been an illusion. Because while the price of your asset has gone up, it has failed to protect the value of it. And it has failed to hedge against the debasement that has happened. So then I started thinking, okay, well, if the S&P is like this, and I have a portion of my portfolio in the S&P, which I'm planning on changing now as a result of this. If the S&P has done this, surely the NASDAQ should have beaten the value proposition, right? Because we've been in a tech boom. Well, here's the value of the NASDAQ priced in the S&P and priced in debasement. By the way, this is the value of the NASDAQ based on dollars. So this is what's happened. This was 2000 and we're all the way up here now, right? Well, this is the NASDAQ priced in M2. We haven't even breached the 2000 high yet in terms of value. Again, the NASDAQ has failed to generate value for holders based on monetary debasement. This is how corrosive this monetary debasement is. And really what's going on when people are now choosing to put their earnings into the S&P, into the NASDAQ, is they're being given dollar gains, illusionary, let me get this right, illusionary dollar gains for real value, right? They're taking your real value and giving you illusionary dollar gains. And people are happy about this. People are satisfied. Why? Because they're seeing the number go up on the screen, but they're not seeing their value actually be protected. Again, go back to this tweet. $1 million in 1971 is equal to $7.4 million in 23. And that's published numbers, but it's the same thing here. Well, if you had $1 million over here, you still don't have $1 million here. This is you still don't have that. It's shocking and it's scary. If you've been, slaving your life away trying to build wealth for your children that are one day going to need it, what you've basically done is you've given away real value and received dollars for it. So you feel and you think you're richer, but you're not actually richer. You're not actually wealthier. So then I thought this must be just the stock market. So many people are talking about real estate. Grant Cardone's making so much money in real estate, etc., etc. Real estate must be fine. The best analog for real estate that I found was VNQ. This is real estate, the real estate REIT priced in M2. And what this demonstrates is that while this was 2007, we've never even breached the real estate market's never ever breached even this little price gap that was created in the charts. It's constantly been on a downtrend since 2007. If you've got your wealth in real estate, it's the single biggest scam in terms of protecting value that is out there. So, and what's funny is with VNQ, with real estate, is that this was the peak in 2007, and we're still right now back at the peak. So not only has real estate not protected your value, it's even blatantly telling you that it's not even protecting the price, because the price is the same as what it was in 2007. But the value is more important than the price, and the value is on a downtrend consistently. This is shocking, because this is who my parents are. My parents are people who have spent 35 years building a property portfolio because it's their duty to do so, and that's the path that they thought was right. And one day their sons, me and my brother, would be able to benefit from it. What they don't realize, and they're lucky because me and my brother are doing pretty well, but what they don't realize is that the value that they've built, the time and effort, blood, sweat, and tears that they've put into building a property portfolio, the value is being stolen while the price is being rewarded. And this is a very important understanding that people have to have. Just because your price of something is going up doesn't mean the value is remaining the same. And in this scenario, the value is actually being taken away and sucked away from you. This is the corrosive curse. And so since 2007, any returns that you've seen on real estate have been strictly illusionary, because there is no real value being built. There is no real value based on M2 expansion that's being built. So then I started thinking, well, if this is like this for stocks and real estate, surely the gold guys must be right. Peter Schiff must be right, right? Gold must be protecting your value against M2 expansion, right? Surely. Well, today alone, gold is breaching its $2,000 again, so it's doing all right. It hit my target of this 200-week moving average, came back up. It's hitting its $2,000 target, etc., right? This is great. Great news for gold, right? Well, let's have a look at gold priced in M2 expansion. This is gold priced in M2 expansion. This is 2011, and this all the way up here is 1980s, 1979, 1980. Gold has come nowhere near its value proposition of protecting someone's value based on M2 expansion. Now, what the gold people, and I was a gold person, what the gold people are hoping for is one day a revaluation and suddenly gold drops from here to up here to protect your value. I don't want to live life like that. Right? I don't want to live life like that. where one day someone, 12 people or whatever, have to decide, okay, we're going to go back to gold and I get my value again. That's no way to live a life. So gold has not protected value at all either. It's not protected value against debasement. The price of gold might be hitting 2000, but the value has been stolen from your gold every single year. And it's the same story with silver, by the way. Silver had its local peak in 2011, same thing. The value of silver protecting your money has been non-existent. So gold, silver, S&P, NASDAQ, real estate have all completely not protected the value. Remember, when I say this, I'm not talking about price. The price of these assets have gone up. The value of these assets have gone down. You should have much more in terms of dollar value than you have right now based on the amount of printing that's happened over this period. We have not even breached the 2000 high when it comes to the amount of debasement that's happened in the markets. This is shocking. If you have assets in stocks, if you have assets in real estate, if you have assets in gold, silver, whatever, the only asset that has managed to consistently beat and increase the value above and beyond the debasement is Bitcoin. Bitcoin is the only asset that continues to make new all-time highs against the debasement that's happened. Bitcoin is the only asset that has a supply ratio and a supply dynamic like what is respectable in order to protect the value of your wealth against debasement. Against debasement is the key. That's what I want everyone to pay attention and take away from this video. It's all about against debasement. You're living a life right now where you are handing over your hard-earned currency and hard-earned energy. They're giving you illusionary dollars while stealing your real value. And that's something I need everyone to pay attention to. And hopefully, putting it into charts and showing you that even if you did the right thing, you put your money into the S&P, you dollar cost averaged on your index funds, your wealth is still being stolen. I want the if I get into the market here at the top, I want this level of value in my wealth. And the only asset that seems to do that, at least that I can chart, is Bitcoin. Don't you want that, or are you okay? So here's the problem that's going to happen at this point. People are going to have to decide, do I want my value, or am I willing to give away my value for the illusionary stability that comes with putting money in the S&P or putting money into real estate? Because that's all it is. It's just an illusion of stability. Because there's no it's a price stable asset. It's certainly not a value stable asset, especially when it comes to real estate. Look what's going on. It's not a value stable asset at all. And this is very important to understand. The price of these assets has gone up. I'm talking here about the value. And value is very important because that's what your soul works for. Your soul comes onto this planet and then converts its physical labor into currency. And that's the value that needs to be protected. If you're not doing that, your soul is being subjugated at this point if you've got your wealth in any of these other assets. This is a very, very shocking realization for a lot of people that even though they've done the right thing and put their value into real estate, etc., all they've had is a slow bleeding of value away from them. And it's a tough thing to come to terms with. I certainly was one of I was one of these people too. I still have some stocks too. And what you have to answer for yourself is, do you want real value, or do you want illusionary dollars? Because that's all that's going on here. As this system of money printing continues up, the only thing that's going on here is your real value is being stolen and it's being replaced with illusionary dollars. And the craziest part about all of this is that All gains in this millennium, all gains in this millennium are strictly illusions. These are illusionary dollars stealing your real value. So I wanted to share this with you and demonstrate how all of these assets look against debasement, not just US dollar price. If you've got any questions, please leave them in the comments. I hope this wakes some people up. It certainly gave me a shock when I started researching into this, and it started me making me consider what my ideal portfolio should look like for the next 10 years. Certainly, I already have a high allocation to Bitcoin, but maybe it needs to be a bit higher. This is a very, very fascinating thing to watch. Please share this video and please subscribe to the channel.